What is going on, Z community? It's me, Tamer Azizz, and today we're going to be talking about the easiest forms of credit that you can get. So what we're going to discuss today are the different types of credit and how difficult it is to get approved for each one. So all types of credit are divided into three main categories. The first category is known as installment loans. This is when you take a big amount of money all at once and then you're required to pay it off over a certain amount of time. Examples of this include your mortgage, your car loans, and your student loans. The next category are revolving loans. This is when you have a set amount that you can use over and over and over again. As you can see, it's somewhat similar to a revolving door, hence the name revolving loan. Now, different types of revolving loans include credit cards and lines of credit. As long as they're in good standing, you can keep on using these over and over again as well. And the last category are known as open loans. This is different because it's not your basic type of loan where you have to borrow amounts and then have to pay it back in time. This is more for products or services. Because of this, the amount that people would have to pay varies from person to person. Examples of these include utility bills, phone or internet bills, and just recently for Canadians, rent as well. Now you have to pay these types of loans every single month, or else you will have these privileges taken away from you. Now that you know the different categories of loans and you know the different types of loans that fit under these categories, let's talk about the difficulty of approval for each of these. We're going to be going in order from the hardest type of loan all the way down to the easiest type of loan that you can get approved for. Now, if you guessed it, the hardest type of loan that you can get approved for are mortgages. Now, it makes sense why mortgages are the hardest types of credit that you can get approved for. This is because mortgages start anywhere from $50,000 and can go up to millions and millions of dollars depending on your situation. Because of this high amount, the approval process is a lot more complicated because lenders will require a lot more things from you. But of course, this is just to make sure that they get their money at the end of the day. Some information that your lenders will require you to give them include your actual job position, a notice of assessment from the CRA, your monthly expenses, your amortization period, which is just another fancy way of saying how long you're going to be paying off the mortgage. They might even ask you to give them recent pay stubs anywhere from 6 months all the way to a year's worth. Now, in the situation where you do not work a traditional job, you can actually secure your mortgage by offering collateral. This just means that you're going to be offering assets of yours to the lender in the case where you cannot pay your mortgage anymore. Assets can include your car, your investment portfolio, or even a boat if that's how you're feeling. The second hardest type of credit that you can get approved for are lines of credit. Lines of credit allow you to borrow the second highest amount. So the things that a lender will actually require from you will be similar to a mortgage, but not as stressful. The things that a lender will ask you to provide them with include your income, your actual occupation, how long you've had the job for, along with pay stubs that are up to 6 months. Lenders will also look at your credit score and specific factors of your score itself. These can be factors from either the Vantage score, the TransUnion score, or even the FICO score. Some of which includes recent credit behavior, credit utilization, or even recent credit checks. Now, when it comes down to having a credit card, there isn't really a specific range that you can borrow within because some credit cards can go up to infinity. But because of their high interest rates, you don't usually see people getting credit cards with limits over $5,000. Because of this, it's actually fairly easy to apply and get approved for a credit card because it's as simple as just going online, submitting an application, and the entire process takes you only like 5-10 minutes. Generally, the only thing that lenders will really look at is your credit score, and at times they will look at your income, depending on the benefits that you will be getting from this credit card. The next type of credit that we're going to be talking about are student loans. This is going to be a lot more complicated to break down because it depends from province to province and even your residency status. A perfect example of this is taking a domestic student that lives and studies in Ontario versus an international student who's going to be taking a loan out through a bank. The approval process and the interest rates for both these type of loans are going to be completely different. Keep in mind that even if a person lives and studies in the same province, they don't necessarily have to be living at home with their parents. Some people actually go to different cities. and in this case, the loaning amount can actually be a lot more higher. There are even some people who don't loan out their full amounts because they've been saving up for tuition beforehand. So as you can see, student loans are kind of a gray area, but they're relatively easy to get approved for. The next type of loan are car loans. The difficulty of getting approved for a car loan is also situational. It is going to depend on the year of the car, the make, the model, whether you're going to be financing or leasing it, and even your credit score as well. On top of that, the down payments that you would have to make on either your financing or leasing terms will also make a big portion of getting approved for this car loan. So we've got two more types of credit, so let's finish strong. The next type of credit we have are phone bills or internet bills. With this, there's no set amount, and as we've discussed before, this is just for paying for a product or service. As long as you're not on the verge of bankruptcy, getting approved for these type of loans isn't really that tough. You do have to be cautious though if you are going to be financing a phone. Just make sure your credit score isn't terrible and you should be fine. And the same thing applies for utility bills. Utility bills can vary anywhere from electricity all the way to heating. And because these are absolute necessities, it is generally pretty easy to get approved for this type of loan. And very similarly to phone or internet bills, as long as you're not on the verge of bankruptcy, you should be fine to get your electricity and heating needs. So let's bring it back in. Because you're not going to be getting 9 electricity bills and 9 phone bills, let's just put those two types of credit aside. When we look at the easiest form of credit line that you can get approved for, first place comes car loans, and then second place comes credit cards. On the other hand, the hardest types of credit lines to get approved for is mortgages at the number 1 spot, and then lines of credit being spot number 2. But then again, Z community, I'm only speaking from my personal experiences along with some research that I've done on the side. So I want to hear about your experiences. Did you feel like there was a line of credit that was easier for you to get approved for than another? Let us know in the comment section down below, because your experience makes our experience. Anyways, Z community, make sure you like this video, subscribe to the channel, turn on that notifications bell, and thank you guys for watching. This is me, Azizz, signing out. Peace.